Yeah, microphone check, screen share check, please. Alrighty. I'm going to be going over this chart a little bit later tonight with the niche traders. Did some work with my son who graduated the data science boot camp and was working on coding up some ideas for the sniper trading system for my brother. You're going to like this one. Let's see what we got here. First things first, I suppose. This was my favorite one for today. We talked yesterday about Alcoa, and this was the low of the day yesterday, and this was the opening. And we said after a 17% sell-off yesterday that if it broke through the low of the day, then there was a good chance for a massive move to the downside, but that I would also be ready for a morning hook sell-off and an upward move. I want to show you how that worked out. Let's see here. So just for reference. This was Alcoa on the daily, and this was yesterday's move, the big harsh sell-off, and we put a tiny little risk box around the close, and we said if it broke down below this, I want you to notice this big red line here. That was the low. So when we go to the minute chart, anything that fails below that line is a massive sell signal. So when we look at this from a distance, a little pointer. So this was yesterday's closing price right here. That was the it opened right around here, sold off harshly, broke through the low of the day here. I should probably put that on a better one. Oops. Yeah, that's the one I want. No, that's not the one I want. Yeah, that's what I want. So this just sold off harshly all day. So the 6 or 7% move after it broke down below the low was normal, not unexpected. You notice how the VWAP moves all the way down and acts like a lid on that thing. So as long as it's failing and the VWAP is going down and all the price action is under the VWAP, that's the direction you want to have as a directional bias. That thing was just getting slaughtered all day. But the key point was the low of the day, this big thick red line was the trigger. Now I'm going to zoom in and show you something cool. So this line here is the open and yesterday's close, and here's that big thick red line. So it opened here, fiddled around a little bit. Now this big red box is $1, and that is the range stat divided by 6. 50 cents is this yellow box and this yellow box, and that's my standard normal management box, my MMRB in Alcoa, which I've been trading for 30 years. As soon as this thing breaks below, I don't even have it shown on here because I wanted to show you the other, but that's the automatic. And then after this little recovery, that's the automatic sell of that hybrid frog right from the opens. But what I want to show you is that in spite of that massively ugly move, we actually had a morning hook as well using the WMB3. So here we are on 1 minute charts, and we have the harsh sell-off, and we're hybrid frogging this. So when we get paid, we got about 3R in hand down here, and we give back half an R. So we're up 2.5. Now you have the oversold condition starts right here. So we read up. Do we have an uptick? No, we don't. No, we don't. No, we don't. No, we don't. Yes, we do. So when that bar closes and that thing prints, you come up to this bar. You come up to this bar. I can hide the Williams percent R and MACD histogram because I no longer need that. So now what I do is I can put my entry at the breakout of that candle. So it opens where it closed. You get the entry. I got my standard 50-cent risk box. It moves up 1, pulls back, resumes, comes back. Now, as soon as it goes below the previous bar's close, like right here, and it's rejecting that big sell-off red line, which was yesterday's low, I'm out. Right there. And that's a 2R gain. My standard move is instantly collapsing dragon, second position, and then cover off this nice move here. And now I want you to know. So this one was massively good. Oop, that should have been an arrow, sorry. This was massively good. Just the collapsing Alcoa. It's just ridiculous. But now I want you to notice we've had oversold conditions this whole time. We do not have an uptick. We do not have an uptick. The question what Nicole says, so I longed it and then shorted to the CD on both. Yeah. So I was short, just the narrative on this thing. Again, I'm short when it breaks through the red line as a collapsing dragon with a 50-cent risk box, because that's my normal box. The dollar box is the big red one. That's the one that is the range stat divided by 6. So I'm short from here. On this one, I cover here. So now that short is over. Now I revert back to form for the morning hook. It was oversold. It's been oversold. I get an uptick finally in MACD right here. I come up to this bar and I draw my entry. So when it breaks out from this bar, I can get long here. So that's long one position. It goes this high and then starts to fail. I exit when it crosses back below the thick red line, which was the boundary to pain and suffering, right? So now I can be short here. I waited for this bar to confirm, and I got short soon thereafter. So that's short one. It comes down and holds this position. When it breaks through the low of the day and it's a collapsing dragon, second position. And remember, on a 50-cent risk box, this one is already 1, 2, 3 are in hand, and a new low of the day, and it's collapsing, and it's the worst symbol in my stack. That's the no-brainerest short ever for a second position. So then the rest of it goes 1, 2, 3. 3 more are on 2 positions. So this big blue arrow is 9R. That is a stop and reverse because we have this. We now have a harsh sell-off. It's oversold. We have an uptick here, but we're still short. And so until I cover the short, I don't get long. But this one is still in an uptick position, so I just stop and reverse and then pick up another. That's about 1R in the usual way. So that's about 10. That's about 14R this morning. So your question was, yeah, I first got short, then reversed on the WMB3, then got short on the collapsing dragon, added a second position, which was a collapsing dragon, and a low of the day, and momentum, and failure of the worst symbol in my stack, just getting short, basically. And then the stop and reverse for the WMB3, because why not? So that was the Alcoa follow-through from yesterday. I just wanted to show you that even inside a great big downward move like this, there was opportunities for these little reversals with the WMB3. But clearly you want to be on the side of the angels, and that as soon as it fell below yesterday's low of the day, the downward move is very easy to believe in. And you could make a living just having the short side bias on Alcoa today. Well, it was about 15. The big blue arrow, that one was not, this one was 9. On the 2 positions, that one was 9. And then there's another 4 or 5 collected from the first 2 trades and then the last one. But the big move of the day was this one, which was like a down and up and immediately rejecting at the resistance, and then the big down. That's why you got to crush this entry right here when that fails through a second time, because I want you to notice that you have a high of the day, a working low of the day, a lower high, and that makes this essentially a kata 2 to the downside, with the added advantage of it's collapsing right at the leg where it collapsed before. So you're entitled to believe it's at least going to come down to here. And then when that fails, that's a new low of the day, and it's technically a collapsing dragon. So you want to pile on that one. And the fact that it was the worst performing symbol in the stock this morning, there's all signs point to yes. So to make the daily gain, I only really needed one symbol today. I prepared 20. You heard me prepare 3 in great detail yesterday. It was, as I recall, Tesla, Microsoft, and Alcoa as my top 3 priorities. But this is standard work. And the important point is the idea of refining the minimum manageable risk box. So if I had used the range stat divided by 6 as my R, this would have been about, the total deal of the day would have been about 7R. But because I am comfortable trading the symbols that I've been trading for 30 plus years, I know that I can manage 50 cents in Alcoa. And so that allows me to have twice the position size with the same dollars at risk. And then I get a 15R gain for the same move. That's an edge. All right, let's see. Just while we're here, speaking of having an edge, my sniper brother has an MMRB in Amazon of $10. Why? Because he's familiar with the stock. He is using his sniper setup, which is his niche trading plan, which is his work in progress. He's risking $100 per trade, which allows him to be trading 10 shares of Amazon. He's going to bring home 8.35R for the day. He has his little sniper PSAR flip. It doesn't work, so he immediately is out. In his sniper program, this is the next logical entry. To me, it looks like a rejection of the 10-period moving average with the RL10 and collapsing. So he gets short. He gets a second position short on momentum and money in hand, takes the exit when it fails to fail further for 5R. He resumes,
that's
misses,
the cross of the blue of
covers
the baby dragon
for another 1.7 or 2.7. PSAR flip and sniper, it does not go anywhere, so he just gets out. He just gets out and re-enters and gets another little piece, and that's 8.35R. Okay, so that's not bad. Now, we're working with another niche trader whose name I cannot report. And he happens to be working on an options buzzsaw. We're calling it the buzzsaw because it is power trading with power tools, and you better be licensed on it. And so he has a number of little trade frames inside here in the standard move of Amazon, but he's using options. And he brings home about $8,000 today on Amazon on just a few contracts. He's buying 2, then a follow through on 3 when it confirms, and he's all out. He re-enters, then scales out. So we're building the rule set for that, but that's $8,000 today on Amazon. That's called the buzzsaw. That is a niche system that we will release to foundations traders only, because I'm not going to give you power tools until you have been licensed. You don't hand a noob a running chainsaw. That's his live trading account, by the way. All right, so let's see what we had today. Now, I want to highlight off the daily report. This thick red line I added yesterday because we identified this location as a really critical state, because it was testing the previous 10-day low. It had closed like right here, and it was only this little short move to the 10-day low. And we said if that collapsed, then there was a good chance that this thing could go visit Z-1, and then maybe all the way down to Z-2. It got most of the way. It got this far and closed at a new 10-day low. And now it's a fraction away from Z2, a fraction away from the collapsing dragon on the RL10, and a fraction away from the 30-day low. And it was a great big daily range bar, and it is now 11.2% off the swing low, closing at 420. What's that? 426. The PSAR extension is down. The hull should be way down. I forgot to update that one. The RL10 is deeply in the winter and down. The slope of the 30 is down. This is pretty much going down. Only the Bollinger Band mean has the slightest upward slope. The long-term RL270 is pointing down. This comes as not a surprise to us. If you've been following along in your hymnal here. Let's look at the sectors. Oops. Oh, just crashed on me there. Just a moment. I guess it was staggered by the size of the moves today. No, you're going to notice when we get to the sectors that the treasuries are not inversely correlated to the indexes. The treasuries were down large today also. So the standard 60-40 portfolio that's 60% equities and 40% bonds or treasuries, that's getting murdered right now. And everybody that is a passive indexer that is just using that fiduciarily responsible approach is getting slaughtered. And everybody that is paying a money manager to manage their money like that is getting slaughtered. And those guys can say, well, we're doing our fiduciary responsibility. So they have plausible deniability. And the government doesn't care, because if you are not financially secure, then you are on the government dole. And the government doesn't mind that. It'll just keep floating debt and socializing debt and make everybody live off the government. It's a win-win for them. Was that my inside voice? All right, so the worst performing index today of our 6 was the S&P, was down 2.74. I mean, I'll tell you when the conventional wisdom breaks down, it breaks down when you needed it the most. When you needed it the most, it disappears. Like all the correlations that used to be divergent are no longer divergent. They're all strongly correlated and everything's going down together. So what used to be a flight to safety in treasuries is getting slaughtered. Who could possibly have known that? Anybody that looks. We've noticed and commented on and traded against the treasuries as they've sold off from 150 down to 119. That's a 20% sell-off in what is called the risk-free rate of return. Oh, but you are getting a 0.25% interest on it. You have that at a time when inflation's at 10%. If they were telling the truth, it's really 20. But all right, diamonds, the Qs, and the Russell all off between 2.7 and 2.6. No rest for the wicked there. Emerging markets were only down 0.89 and treasuries were down minus 0.63. So much for the inverse relationship between treasuries and equities. That's your flight to safety. It lost 0.5% and it's now down below the key price level of 120. All right, what was worse than the S&P today? A lot of things. First, tech and finance both down 2.8 and 3%. Blockchain and materials 3.5 and 3.75. Commercial real estate down 4%. Global future of finance 4%. Oil and gas exploration 4 1/6. Bitcoin in Brazil 4.3%. Global or large cap blended crypto blend, they're 5.5. The individual targets that got murdered. Balked off 7%. Alcoa 6.7. Devon Energy and Squarespace 5 and 4.7. Coinbase 4.2. PayPal 3.7. US Steel 3.1. Apple 2.7. So you can't even hide there. Microsoft 2.4. Cliff Natural Resources 2.13. So now we're above the market. Oh, yeah. These are things that outperform the market. So I guess you feel better if you own these because of reasons. So we had energy was down 2.45, consumer discretionary 2.3, oil 2.3, lumber 2.2, lithium batteries 2.2, wheat and precious metals. That flight to quality and safety down 2%. The FANGs 2%, blended commodities 1.9, clean energy 1.7. The next cluster, the other lumber 1.7, ARC innovation 1.6, biotech, consumer staples, that flight to quality 1.5, Ethereum 1.5, ARC genomics 1.5, moonshots, agriculture down 1.25, marijuana 1%. So I guess you got marijuana and the munchies right there. Nice. I don't know what that means. Mexico 0.5, Rivian 0.44, and now the best performing target out of anything, Tesla, only down 0.37, which is really spectacular in my view when you consider how every other thing in the market was getting slaughtered today. Tesla was able to hold at 1,000. This is like Elon Musk, save me now. In Elon we trust, because he's going to buy Twitter. And he's going to use Teslas to create auto-driving robotic taxis and completely revolutionize personal transportation in the nation. And it's going to eliminate drunk driving and traffic jams. It's going to reduce energy consumption so much when you have intelligent vehicles that never have to stop for red lights because they're keyed into the transportation control grid. That's what he announced today. That is a huge news report. 0.37. The only thing in our stack that was in the green, the VIX at 5%. So that's your list of things that we care about. Now, the beauty is in bearish normal conditions or bearish volatile, you can make the easiest intraday money in my view. It's hard, but it's easier with no overnight risk. And we've shown you some of that already today. My new favorite kind of report right here. So this is the prototype sniper, and I'm going to look at the first column, the reward to risk ratio. These are the ones that are giving you the swing trading one day at a time on a by using the range risk, and going back to test the 10-day high. If you use today's range risk and it was going to go test the 10-day high, the reward to risk is what you would get for that. So you get Caterpillar at 2.7. That's nice. Here's my boy Microsoft is now back down to 1.0 because his range was so large today. Then the second thing that I look at is the R-stat divided by my risk. And that's the one that is comparing the size of the range stat move against today's range. And so this is the coiled spring trade as I described yesterday. And it's written up in the daily and the weekend report that explains this in greater detail, but you'll get used to it as we go. And then this is my reference column for the range stat divided by 6 that gives me that small scale intraday trade box. Yesterday Alcoa was $1, which would have yielded a good trade today, although I was able to go with 50 cents because that's one of my specialties. So this is today's update on the sniper. And I like Caterpillar because it's not only a good swing trading one day at a time, it's pretty good. One of the best. Oh, in fact, the best on the coiled spring. So Caterpillar is on my list. And Goldman Sachs looks pretty good at 2.2 and 1.4. So that's how I'm using this already. This is an emerging idea that's going to become a niche. All right, let's go into the weekend reports. Now, I think what I want to do is I want to cover, since we already started some of the traders, I want to clear the deck with the traders from today, so that we can be fresh for the reports. All right, so here's Tim trading the S&P today. Really nice work. Dude's on it. Less than a month. And he's crushing this. All right. So he plays kind of a Kata 2 in the PSAR flip with the standard risk. He played the risk down to the VWAP. He could have played it to the bottom of the dragon. I'm not offended by this. He was using an 8.5, 8.5 points standard size based on the Z3P from overnight. So I'm not offended by that at all. I prefer that you use standard risk and sort it out. Once you use standard risk like that, then if you want to get a larger position size, just increase the number of dollars at risk per trade. Don't change the geometry and architecture of the trade frame. Hey, I want to get a bigger position size, so I'm going to take a smaller risk. But no, just increase the dollars at risk per trade. Keep your geometry the same all the time and only vary the dollars at risk and increase your exposure in that way. That way, you're building up a constant frame of reference with a standard geometry, and you have evidence from previous trades that you can rely on. As soon as you start varying the way that you're computing the risk box just so you can get a bigger position, remember the size of the risk box is related to the hypothesis or the theory of the trade, which says, how far does this thing have to go to persuade me that my trade is not working, but that it's failing? In this case, he was using the overnight risk from the Z3P overnight box, which was 8.5. That's what he estimated as the manageable noise box. So he used that throughout the day, and he's bringing home 4R on a day when the market got slaughtered. So he gets paid, nice exit. He waits for this move off the bottom. It also coincides with a PSAR reversal, gets paid, doesn't stick around. Stop and reverse, a 1, 2, 3 entry, gets paid. He might have stayed one bar a little too long, but still that's fine. He waits for the Kata 2 and a crossing of the, so there's a Kata 2 because it's higher, a low. It held support at the VWAP, made a lower high. So now when it comes down and it's testing the VWAP, he gets short and gets paid. Tries a second one and scratches, stops and reverses at the PSAR, gets paid. Re-entry, gets paid. Short, gets paid. Quick scratch, re-enters, gets paid, brings home 4. You're not going to get much better than that. Less than a month of doing this, he's approaching 200 trades, and he is developing proficiency. That's how you do it. Question 1. He earned an answer. Dragon horns and another reason to get out on the next bar or to even go short. Yeah, the dragon horns and the revert, that's enough just to get out. It's holding support at the edge of the dragon and the edge of the river. And that's the last place you can exit and still get paid. You know, if you wait any longer, it's a scratch trade. Like if you waited for the PSAR flip, that's a losing trade. So you got what was available. Well done. This was a failure to follow through at the high of the day. Each time it was hitting that price here, it sold off sharply. So now it comes up here and starts grinding lower. Of course you get out and make a bank. Of course you do that. That's what you do. Let's see. Griff using just the SSC. So he's only going long on a day when the market is getting murdered. And he still gets paid on the long side only. And you know that these are going to be amazing collapsing dragons when he gives us the entire picture tomorrow. Don't lose money. We saw this one from my brother already. But nice work. For 20 years, I have been trying to persuade him not to trade. But he won't listen to me. So we're going to try and make the best out of it. We'll look at some trade frames from Glenn. Bed Bath and Beyond. Very strong support here. If it breaks below 14, look out below. But that's really so there's his risk box. Here's his second position long. That's the top of the weekly. Yeah, this one has room to go. It's held support pretty nice. And today it actually made gains. It pushed up and then came back. It was still positive for the day. So if there is a relief rally on Monday, this would BBY is a very interesting symbol. That's a pretty good move on a day when the market was down almost 3%. He finds good frames, says Glenn. Telling you, he's finding a niche in the hearts of his countrymen. Here's our weekly. I might even consider that coming all the way down to here, and that's where he's going to put his second position. Leg 1, leg 2, it gives back and now is holding, and then had a nice little pop right here on Twitter. I think you better buy Twitter. You better buy Twitter because Elon is going to own it and make it something amazing. He's going to make it so amazing that the government's going to buy him out at a premium. So that's what I think. That's not advice. That's just an opinion. Here's some COTA 2. There's your COTA 2 entry. There's your next leg up. Here's another COTA 2 developing. He's waiting for it to clear before it goes. If this gets above 49.50, I think I'd be using about a 50-cent risk box so I could get twice as many shares. That's just me. I think this is when you hold your nose and buy it. Clorox, industrial cleaners, chemicals, has had a really nice run. Here's a COTA 2, and off it goes. If it could do this on a day when the market got slaughtered, of course you buy that instantly. As soon as that clears, you buy it instantly. And I think you use the stop here. So again, you can get twice the position size. And then I'd add another one here. I mean, what me worry? That's a gap. There's no resistance at all until it gets up into here. So get a second position at 153. High priority. Kimberly-Clark Industrials. Wow, a nice big fat wide weekly trading range. Reasonable weekly move. Look at that. Wow. This is one, boy, if this doesn't work, there's going to be a lot of people that bought this right here thinking, what in the world did I just get into when it comes back to here? Boy, that could really hurt some people's feelings. On the other hand, if it does work and you get in right there, then you have a reasonable expectation of this second position here. And you're buying that second move. I'm glad I'm not holding that over the weekend. I'll tell you that. I bet you I'm glad I'm holding nothing over the weekend. Whew. Take Two software. Look at that squeeze play on the weekly. Big move, big collapse, second position if it collapses further. Boy, just COTA 2s to the downside galore, like SSC or SFC, COTA 2, collapsing dragon, getting ready to collapsing dragon again. Oy. On the other hand, you can see why that could work to here. One, two, three. 1, 2, 3. And if it breaks below there, the big collapse. It's finding good ones. I'll tell you what. If you're not using his brains, I don't know why. Wojcik on the Aussie. Wasn't much room in here, but this is where I think that thing is supposed to be long. If we were to scroll down. Yeah, this thing is supposed to be getting long in here. That looks like unless that was a second position. Quick scratch, good reentry. We got to get paid on that one. Yeah, I agree. I didn't see it. Good. Collapsing dragon is going to make up for a lot of pain and suffering. Your collapsing dragons, when this whole thing right here collapses, that's a big fat trading range. And when that thing collapses, you've got to have a downside bias and pile on. Break even today, but 5 for the week. Can make a living on that. And this is on a symbol, this is on a system that you're just learning, that you're carving a niche. We got to do better on this. There's no way we should be just breaking even today. I want you to study that. What can we do to improve this one? Like not taking the long side trades when there is a massive downward move. We got to pick that. We got to be able to pick that up. You got to be able to look at multiple time frames. The same way that we look at the 3 time frames, like the weekly, daily, and 30-minute or the 60-minute. And you're tactically trading here. You got to be mindful of what those things are and the information it provides about whether you should have a long bias or a short bias. The fractal view of life here is not restricted just to the framing. So if I'm primarily an intraday trader and I'm trying to, trade in while it's hooking and jabbing, but I know that yesterday's range was here, and I know that this was the low of the day, I should know that these breakdowns are giving us real strong signals because of the information available from the previous day. We might just be an intraday trader, but these trends and key price levels are coming in to inform our trading posture. So let's be mindful of those. I showed you why today that's an important one in Alcoa. All right, finally, last one here, Electronic Arts. Nice tight little wrist box in here. I like that one, man, because it's going to break quick or break up quick. I like that a lot. Little bullseye in there. Yeah, this is either that run is going to fail and it's going to come back into this, or it's off to the races. And notice how small that little MMRB can be compared to the, frog box. So you get paid for being able to refine that. All right, nice work. I think that was everything.